If you've watched my past videos, you know that I've been very bullish since beginning of 2023. I really turned bearish beginning of month of May. Why? Well, I studied the markets based on historical statistics based on the last 100 years. And what I've found is that midterm election years are the most interesting of all years in the stock market. The first half is pretty vulnerable, especially from May 1st till end of September. If you've read my book, you know that I've shown that the whole saying of sell in May and go away really applies to midterm election years. All other years, it's statistically the same as the rest of the year, but it's all different in midterm election years. So in this video, what I want to show you is, what if you want to be bullish, but you want to be based on data, and you want to basically, you want to buy stocks that tend to go up on midterm election years in the summer, which is the most vulnerable time. So first, take a look. I just have Dow Jones Industrial Average since 1966 up, looking at a date range between April 21st and July 5th. Look at this. 1966 down. 1970 down. These are every 4 years because it's midterm election years. What are the exception years? 1990, it went up 8% during this third date range, which is April 21st to July 5th. And 2014, it went up 3.5%. All the other years, this date range closed down. So far this year, this date range is up 0.77%. But odds basically are on the side of this also going down. Now, let me show you other things. How about transportation? Here's the Dow Jones Transportation Average. This is all the data that I have. Basically 9 midterm election years between May 1st and October 11th. Look at this. It's gone down all the years except this one that was basically flat up, a teeny tiny move up. But basically pretty much they've all been a down date range for this May 1 to October 11. How about utilities? Here it is, I found right beginning of spring, which is actually, it's 8 days after, March 29th until May 18th. It was down pretty sharply. Utilities, and look at what happened this year. It followed, down 5.65%. But look at what happens here at the end of this date range. Utilities start trending up. Historically, they're bottoming about here, and they're going to trend up. How about transportations? Another down cycle. This is May 12th until October 10th. They've been down 78% of the years. This year so far up 1.41%, which is surprising when the cost of energy is up. Transportation sometimes comes down when that happens. So we've seen those. How do we find these stocks that actually go up during this time? Well, I'm going to go select S&P 500 stocks on TradeWave. If you take a look at it, it found 131 opportunities based on last 10 midterm election years. I'm going to change this to 8. 8 of those 10 have to at least be a winner in one direction or another. And now look, the very first one is Merck. But it's long. It's a defensive stock going from 16th of May until December 10th. But we just want to look toward till end of the summer. So I'm going to switch this to 60 to 150 days. And look on the bottom. It found 145 opportunities. 70 of them are long and 75 of them are short. So slightly more shorts than long, except the first 4 by Sharpe ratio are shorts. Right there. Starting with Pollitt Group. What if I just want to see longs? Look at this. Now these are defensive stocks for midterm summers of midterm election years. And the very first one is Johnson Controls. They do well in the summers of midterms. And look, from today, basically, because May 16th was a weekend, so the first trading day is today until August 21st. Johnson Controls has gone up an average of 11.42%. Look at this, 2022, it went up 7.73%, closed 7.73, but it went up an additional 8%. So if you know how to catch the height, it would have been around 15% in 2022, and it did really well. The year it didn't do as well was 2010. And look at 2022. It went up 26% and closed down. Minus 1.49%. It's a pretty impressive performance for midterm election years. And the very next one is the Southern Company. Look at that. Another midterm election year performance, strong performance right there. DTE Energy. Molson does well. I guess people start drinking on midterm election years. Drinking Molson. And here is another defensive stock, would be Merck, does well. And look at this, even Coke does well. I guess people drink Coke on summers of midterm election years. More Coke. So these are all longs. I'm just quickly going to also look at the shorts also. Which we saw, the first one was Pollitt Group. Illinois Tool Works, that's terrible. Look at that. This is not a good year for them. Midterms. Another one, here's a mega cap. Caterpillar does terrible. Summers of midterm election years. Look at this. It goes all the way till end of October. Then it bottoms and goes up. Even Applied Material. Western Digital. How about Dow? We'll look at longs for Dow. Dow is actually pretty defensive because there are more longs than shorts. For the date range, we selected 60 to 150 days. And these are all the defensive ones versus the ones that don't do as well. Caterpillar, Honeywell, Boeing, Disney, IBM, Travelers do not do well on midterm election years. And let's also take a look at commodities. I've seen people advocating online, really big time websites, that markets are going to crash, you should go into commodities. I selected some commodities here so I can show you what the commodities have done in the past. Here's gold. I am looking at gold from May 12th until July 31st. It's gone down in midterm election years since 2006. 5 of them. This is all the data I have on TradeWave, so this is what we can see so far. That's not what I wanted. I wanted this. Let's also take a look at crude. I'm going to first look at the earlier part of the year, which is from March 15th until May 2nd. How has crude done? Look at this. Crude has been bullish since 1990. It went down, but from 15th of March until May 2nd, it's gone up sharply. In 1998, it went up, look at this, 20, 30, over 30%, but it closed up 20% during this date range. And this year, it looks just like the other years, and we thought the only reason crude went up so sharply was because of geopolitical news. It's not. It's going down. It's going up this time of the year. Look, it closed up 6.51, but it went up an additional 12%. It did this thing in 2022 also. It looks almost the same. In 2018, closed up almost 11%. 1.71% in 2014, but it did go up an additional 5.34%. Now let's look at what's going to happen after this based on history. Look at that. Now we're looking from May 1st until September 15th, and it actually looks bearish. Look at all the downs. 2018, it closed up 2.31% after going down 5.56. The only year that it went up anything appreciable was 2002, almost 11%. But it dropped 11% first. All the other years, it closed down. And let's just look at lumber. Also, it looks pretty down for lumber from 8th of May until September 20th. Why? Because this has been what's happening in the past midterm election years. So this is all based on statistics and probability. This is what we're gonna expect if market is going to repeat what it has done in the past with high probability. If it follows its probable path, this is going to happen. If it wants to go into an outlier, which is less probable, then you're going to have an outcome based on those years that are not as likely. But I like to bet on high probabilities, and this is what the highest probability tells us. If you like this, please subscribe to this channel, and there will be a lot more videos coming up. Till next time.